Good evening. Welcome all of you to the 13th edition of Savings and Investment Strategies and Options. The numbers to you, two proven established Dr. Charles Barugahare, a fellow of the Association of Chartered Certified Accountants, a president and founder of Finance Literacy Improvement Program, and he has been accounting officer in several organizations, namely Market Director Internal Audit. Dr. Charles has also been in several boards, public and private, and also in heading committees like Audit, Risk and Compliance Committee. A author of several books, Navigating the Financial Path, the 30-Day Personal Finance Improvement Challenge, Breaking Expenses, Rising to Outcome Income, and the 9 Pillars to Exploit Your Potential, a guide to self-improvement. Dr. Charles Barugahare, you are most welcome.
Thank you.
Another distinguished panelist is none other than CPA Fredrick Kibedi, a managing partner at PKF Audit Firm and the 8th president of the ICPAU Uganda. And he has been on boards of several organizations, including the Council of Uganda Christian University. CPA Fredrick, thank you, and our audience is constituted of academicians, students, investors, regulators, chief executive officers, board members, public and private entities, small, medium, and large enterprises. Ladies and gentlemen, you are all welcome to the Let's break the ice. Dr. Charles Barugahare, savings and investment options and strategies. Your childhood memory of savings and investment.
Well, good evening, ladies and gentlemen. It's an honor to be here this evening, where we financially learn, be inspired, and perform. Now, my childhood memory related to saving is related to all of us. By guidance, we had to have a garden, and that would have to be sold. And when they are sold, there was one pocket where that money was kept. That was my mom, my late mom. And you would only get it or access it when you have reasons for using it, and those reasons must be justified to her to the satisfaction that you are going to use it for a justified purpose. So saving began at that early age, influencing us to drive the aspect of growing into responsible people who can save and grow and improve. Thank you.
Thank you very much, Charles. CPA Fredrick Kibedi, any reflection of your childhood that possibly informed what you are today in the line of career?
Thank you very much, Doctor. I don't think I have specific memories of savings per se, but I recall Dr. Barugahare said we had these circumstances of granaries, and I don't know whether this present generation would understand when we talk about a granary, a place where you stored foods that is from the previous harvest. And it was considered that homes that did not have granaries were irresponsible. In fact, there was not only the granary, there was also in the kitchen you had what you call a chimney, the place where you store firewood, because supposing there's a rainy day and you can't go out, you should be able to survive. And so there was this consideration that the homes of the wise had granaries where they stored food for both eating, selling, and also for the next season to plant. And for me, that's the fair understanding of what it meant to live not only for the present, but to live also for the future. And I think it was great wisdom from our grandparents that there must be a way in which you preserve yourself, not only now, but survive even in the future, guarantee the future, having some store up for it.
How wonderful listening to your childhood stories. This is lifelong education. Charles, starting with you. What is savings to that roadside vegetable vendor?
Thank you so much. Saving basically is about putting aside some money for the unforeseen, for the future, and meaning that you are able to recall it at the time you need it most. A good example I can use to explain that is that the seasons are there when reflecting a period where you will harvest, and when you harvest, it should be able to take you up to some time, which should enable you to go to the next harvest. So when you put aside some money, or when you earn salary this month, on 30th, it should be able to take you up to the end of next month. But supposing next month there is no salary, there should be some money that can extend you a little further, beyond a month or beyond 2 months. That's why we sometimes talk about emergencies and the precautionary kind of savings. So saving is basically putting aside some money that you can use at a later date when need arises.
Thank you. Wonderful. CPA Fredrick Kibedi. From this definition, what importance do you attach to savings?
I think I'll have to speak without my video being on because I can see the shakiness of the internet, so that we are able to save some energy or bandwidth to be able to continue speaking to the very topic that we're talking about. I think the importance of saving is about self-preservation. You can afford to be dignified today, but you also want to be dignified throughout the time that you live. And the problem that we have here is that we don't know how long we are going to live. So you cannot say, I've stored up for 3 years or 4 years or 5 years. That's the reason why we must be able to have some money, some resources that we have put aside to preserve ourselves both in the short term and in the long term. While in the short term we call it savings, in the long term it will be investment. Because then you want to create a situation where you are able to continuously survive without having to be dependent on resources that initially you are able to access. And so I think savings is a very fundamental aspect of our life today that we do so well not to ignore it. In fact, there is a wise saying that says that the chameleon that is going to survive the burning bush must abandon the majestic walking style of its ancestors. You know, the chameleon can walk in majestically moving one leg after the other, but if the bush is burning, it must hurry up. And what we have now in today's world is the burning bush of resources getting constricted, and therefore needing wisdom from each one of us online here and those that are going to listen to this podcast to make sure that we have what it takes to sustain ourselves both in the short term and in the long term.
Thank you, Charles.
Yep.
The conversation is getting structured. From understanding savings to importance, what is the best time to save? And there are some decisions that influence saving.
Thank you so much. Maybe just to chip in a little and supplement on why save, I want to pose a few questions here. One, how many of us will live up to age 70, up to age 80, up to age 90? And all of us would love to live up to that age. But how many of us will be working at age 70, at age 80, at age 90? But even when you are not working, you should be able to, you are compelled to spend, we all have to spend whether we are working or not. And because of that, two issues arise. The first is you will either live on your savings and investments, or you will be a financial dependent. So type in the chat room where I would prefer to be a financial dependent or actually to save and invest and then have some money to be able to spend. Now, that for me becomes a strong reason to save and invest. But now turning to your question, the environment to support saving. Now, the first is you need financial knowledge, financial education. Jim Rohn puts it this way, that if you don't invest in yourself, then you will not know why and how to save and invest. So when you don't know why save and invest, even the drive to save and invest will not come in. So that's the first reason. You have to have financial education to propel you into the direction of saving. The second is that you have to be aware that saving
and investment requires you to know that where you are going to invest, the aspects that have high risk, the aspects that have low risk, and therefore you have to put the understanding of where you are going to save and invest your money, so that when you are 30, highly risky. But if you are age 20 or age 30, you can explore, you can have 80% of your investments in things that can actually be high risk. And because they are high risk, they also have high return. But they can also have high losses.
But can you afford to have high losses at age 60? The answer is no. But can you only remain in the conservative way of only secure? No, you will also need to grow. And therefore, it becomes very important that you identify things that you can invest in, balancing risk, both low, moderate, and high risk. And the other is cash flow. You must invest having a perspective of what are your needs of cash. Otherwise, if you invest in long term, when you have immediate needs for cash, then you will end up borrowing, and even what you invested in long term will be secured for short term borrowing, which will be at high cost. So cash flow becomes an important reason to guide you in where to invest. The other reason is your goal. What is your goal? If your goal is clear that I want to move from point A to point B, and the only way to reach there is to put aside 70,000 every month, then that goal will be able to direct you there. In football, that's why they say goalposts. All the players are aligned to focus in that small area which has a goalpost, so that when you pass your ball there, then you will have scored. Same with saving and investment. You must have a clear goal so that it directs you to where you can focus. And with a clear focus, then the energy will all be concentrated on that one aspect of you are focusing on to achieve. I thank you.
Thank you very much, Charles. CPA Fredrick Kibedi, the conversation is getting connected, and the audience are listening. From savings, how can institutions, families, individuals build capacity to save?
We have things that we need to overcome because the culture of savings is not very well inculcated, especially in this part of the world. This part of the world believes in inheriting from our parents. We also believe in survival as a God-given. We also have a lot of faith that God will provide all the time that we need, the resources that we need. So there is need for a mindset change from the cultural beliefs and the cultural pressure that we have. And then we are born with a lot of pressure. When you are born in an African family, you're also born responsible for both your siblings and the children of your brothers and sisters who may have parted. Therefore, the culture of saving is something that is not very well inculcated. The other aspect that there is financial literacy, and Dr. Barugahare has just spoken about it. Many times people just follow the crowd. They got somebody doing something, they also would want to follow and do whatever that person is doing. They don't have the ability to think through a goal from the beginning to the end and be consistent in moving actions towards that goal, which we call discipline. We need to have financial discipline. I normally tell people many times you walk on the street and you're busy stealing from yourself. You as a spontaneous buyer, buying everything that you see on the street, even what you don't need, because you're just simply seeing things and buying them. At the end of the day, you have stolen from what you would have actually had as a saving to put aside for a day that is unknown. The other aspect, of course, is the fact that we don't have a system. The systems are beginning to emerge now, and I think we'll be talking about them in this we'll be talking about them in this conversation. The system of automated income savings. I can see there's a request for me to put on the video, but I'm seeing that there's a lot of sluggishness in the picture, the way it's coming. But I think we can deal with it technically behind the camera. So the other aspect that you normally would have, which is very difficult, is having the discipline to know that when income has come in, you have to save part of it. You have to pay yourself part of it first before you deal with other issues. You have to have the discipline to know that the number one person that is causing this influence to come in is yourself, and you need to be rewarded. And I think those three form the basis for the response to how should then organizations, how should individuals, how should the persons have the discipline to start saving, and they move from just saving self-preservation into investing. And, uh, and then you have the other aspect of it, which is really about people saying, I will invest when I get the money. They are looking for the time when they will get the money. If I have 1,000 shillings I can't save, the day I get 10,000 shillings, I'll start saving. Or if I am earning 300,000 shillings per month, I can't save, the day I earn 3 million shillings, I'll start saving. And if there is no discipline, you'll find yourself that even when you earn 3 million shillings, 10 times more than you had, you'll still not save. So it's about being deliberate, like Dr. Charles has said. It's about being deliberate. It's about knowing your goal. It's about being disciplined to move towards that goal. And it's about being intelligent enough to know that things are not always going to be the same. You will not have the same energy and the same opportunities that you have in your 30s and 40s as you would in your 80s and 70s. And it requires careful planning and careful self-preservation and being deliberate about where you're going. Doctor.
The issue of discipline, culture of documentations is coming up. How can one secure his savings?
Thank you so much. I think the beginning point is what CPS Fredrick Kibedi talked about, the issue of consistency around what you are focusing on. And Francis Mwesogwa said, save me today, I will save you tomorrow. That's the language of money. Save me today, I will save you tomorrow. Nasa Jumba said, a fool with his or her money will soon depart. And those two phrases raise fundamental questions around how we are focused on preserving, but also getting the knowledge to be able to protect. Now, you cannot talk about protecting without, first of all, having the knowledge to attract, without having the knowledge to grow, without having the knowledge to effectively use, because that's the tail end of financial management, because there are four aspects: attraction, effective use, growth or investment of that, and therefore protection. So when you jump to the fourth, it's like riding the bicycle from the front. You are likely to get an accident. So my thinking is that you get to the foundations of how is money attracted, whereby if you are an employee, for instance, you are looking at how you create value so that you can attract more pay from your earning. Because if you attract more pay, if you have been saving 10,000, you can now be able to save 20 or 30,000. And when you save 20,000, then you have the environment now to have a bigger thing that you have a concern to protect. But that is in recognition that you are not falling into trap with Parkinson's law, which says that expenses will always rise to match or even exceed income. So if you are able then to grow your income, but overcome that law of Parkinson's law, then you are able then to put aside that money and then be able to think about how to protect it. There are several ways to protect it. One is insurance. Insurance is picking a lot of attention in the country where investments are insured. That's one. Number two is putting it in investments that are fairly secure. Some of the investments that are fairly secure, of course, there is no 100% guarantee of safety, but the closest to 100% are bonds, unit trusts, where you know that your money is fairly secure and you can get it at reasonable return. So choosing where to invest is one way of securing your investments. If you are in agriculture, for instance, and you have not, I'm assuming it's a reasonable farm, and you have not insured it, there are now insurance policies for agriculture, and hailstorm comes, then you will lose all that farm. I know of a gentleman who had planted over 20 acres of matoke using advanced irrigation, but hailstorm and wind came and put all the banana plantation down, but had not insured it. And that was a very big loss. And therefore, one way to secure is to insure, but also to identify investments that are fairly secure. I thank you.
Thank you very much, Dr. Charles Barugahare. As a CPA Fredrick Kibedi, to connect to this, is source of income important in savings? We have business owners here and they're listening. Your guidance would be key. Thank you.
Thank you very much, Dr. Robinson, and thank you so much, Dr. Barugahare, for the explanation you've given there. You know, I'm involved in a day-to-day on advising businesses and critiquing their models. And quite often times, the biggest problem you have is not knowing how much you are earning as a business, not knowing how much you are getting from the sources of income that you have. That's one aspect of it. And it's largely driven by the fact that we don't have the culture to record. And therefore, you imagine touching your pocket and finding that there is money there, and then hoping that by the close of business, by the time you close that shop, the money would have increased. Sometimes we don't even count it. Sometimes we don't know how much stock we have. You would turn that into the money that we earn. And that's the beginning of the problem in saving. Not knowing how we match our income with our expenses, and not knowing how we avoid the grow costs faster than the income is growing, and look into the future and know that this income is going to be able to sustain me for this while, or these costs must be controlled in such a manner that I have a saving, because savings is really about uh, you earning, and then the drivers of the costs of that earning are controlled in such a manner that you make a difference, what we call enjawulo. Enjawulo in a positive way, not in a negative way. Enjawulo, the difference between what you have put in and what you're getting out. And so, yes, I agree, sources of income are very important, and growing them is also very important. If you're running a business, you have one source of income, it's very important to understand what other sources you have that can actually generate that income. And it's about being aware, it's about being awake and alive to the facts that things are changing, the terrain is changing. If I am earning, and Charles mentioned it, if I am earning from a job, uh, what is the employer paying for? Are they just paying for my qualification? Are they just paying for my presence? And being able to emphasize what the employer is paying for, and probably think about what is he going to pay for tomorrow. It sounds, many times it sounds academic, but it's not. It's a critical thinking that goes into knowing how you're going to survive sustainably, and not leaving anything to chance. You know, even from the scriptures where I'm very grounded, uh, uh, in the creation senses, he talks about creating the plants of the earth, and the seed in the plant for the next season. It's all scientific. The fruit comes out, you eat the fruit, but if you also eat the seed, you're in great trouble. You know, today you meet people who tell you, we used to have very good jackfruit here. The truth of the matter is that you ate the jackfruit, but you also ate the seed. You put the seed, you burnt the seed and ate it. So the generation that we have now does not have what you're talking about, can only be only in hearsay. And there's African saying that we do not inherit the earth from our parents. We borrow it from the future. We have a responsibility to hand over to the future an inheritable earth, one that is productive, one that has resources. Just because you inherit yes, they may be income streams that you have, but growing them should be something that you do consistently. You may start small, but consistently grow them. And the moment you start saving, even if it's the least, and you begin to realize that this is growing, it encourages you to move to the next step and the next level, and then guard it, protect it from the pestilence that could easily eat it. And I think we're going to talk about what those are in terms of making sure that you're well protected, because today you might save and invest, then tomorrow everything that you ever lived for is crushed. That's when you hear people killing themselves or looking at no hope at all and just deciding uh, to shift into a planet altogether.
What an interesting conversation. Quite constructive engagement. Ladies and gentlemen who are just joining us, welcome to the 13th edition of Financial Education, Savings and Investments, Options and Strategies. With me is Dr. Charles Barugahare and CPA Fredrick Kibedi. We are left with 20 minutes, but I'm getting information that we should increase the time because it's engaging. This session now, we are getting into investments. We have been talking so much about savings, much as some answers we are cross-cutting, and the pattern here is all of you, because of your comprehensive background, experience, expertise, you have one thing to say from the other in a different way. What is investments? Dr. Charles Barugahare.
Thank you so much. To look at the word investment, you are basically looking at growth. You are looking at, if I had 10,000 today, how can I make it 20,000 or 15,000 in 6 months or in 1 year? That is what is growth. That is what investment is all about. That you have a resource that you are putting into an environment that facilitates it to grow. So that when it grows, it is able to help you enjoy it more in the near future or as you also go along. So that is investment. But the important aspect around investment is that anything that does not grow dies. And if anything that does not grow dies, it means if you have money and you don't facilitate it to grow, it will eventually get depleted. Look at it this way. If one had around 7,000, around 1987, 7,000 would buy a cow in 1987. How much is required to buy a cow now? I think about 2 million. Therefore, if you had kept that money under your bed, therefore, you would have lost it. But somebody who bought land of 7,000 now, and chooses to sell it now, I don't know how much he would be able to get. I was recently looking at some of my late parents' documents. I looked at the entire land that Mzee owned. The whole land was bought at 315 shillings in 1971. Now, if you had said it now, I don't want to disclose the figures, but that explains the power of saving, putting some money aside into something that is able then to grow. And that's where I get into passion, where we tend to look at the things that are more perishable and we get excited about them. When you enter into a meeting room, you see the phones that are on the table, but the moment you get that phone from the shop, if you want to sell it, you can't even get half the price. So, would you be investing in that phone unless it is actually being used to generate a return? But you'd find what you are using for that phone is a smaller fraction of the functionality of that phone. And therefore, you are making losses. And you are waiting for the next release of another phone. And therefore, for me, investment is about putting a resource into action that facilitates it to grow on a consistent basis over time. Thank you.
Thank you very much, Dr. Charles. CPA Fredrick Kibedi, can we also hear your perspective of investment?
I think we have the same perspective with Dr. Charles in terms of what it is. I mean, put simply, if money is not growing, that money is practically dying. He used the example of 1987 and reminded me of the currency reform of 1987. People woke up one morning, what was 100,000 became 70,000 all of a sudden. And currency depreciation and the inflation are the key stealers of the resources that are not invested. And a good demonstration of what it means to kill money by having it in your pocket, burying it, and not investing, causing it to grow. The other aspect that is really about investments is people have got to make decisions, but many times the decisions they make are not informed decisions. And we don't want to go into paralysis of analysis of how you go about these things. The most important thing for you to know is, have you placed your eyes to see where you're putting the money? Are you looking before you plant, or are you taking a gamble on it? Because you see, if it doesn't grow, you're going to be very miserable and you're going to be very discouraged. So I think from an investment, from a definition perspective, money starts to grow. If your resources start to grow and multiply, that means that you have invested. The question should now be, at what rate do you want to grow, and where are your projections in terms of how big, how far you want to go in terms of growing that money. Again, it zeroes down back to your financial goals. You want to be a pauper in your later years. You want somebody to refer to you as the person who once had money, now does not have money. You want to be in a situation where you are totally and fully dependent on others. And I think that's very important for every listener here. Begin to think about what goals you have set, financial goals you have set, and how you're growing towards those goals, the discipline that you keep to make sure that you're growing. And you know, anything that is not measured, we normally say in accounting that if you can't measure it, then that means that it's not growing. For you to be able to know that it's growing, you need to see where it was last year and begin to measure where it is this year. That's the reason why we look at balance sheets, look at the statements, just kind of make sense of whether this business is making sense, whether the shareholders are going to get their return for what of investing in this particular resource. Or else it is something that is an encumbrance, a liability that is only causing you pain and failing you from sustaining a good life. Doctor.
Wonderful. This is a financial education series. And you can tell why we say education is not a cost but an investment. We are learning, we are enjoying. CPA, Kibedi, and Charles, when we talk of investment, I know you have already talked of bonds, stock, real estate, and other options. To somebody in the boardroom, to somebody in the market, the word risk continues to come. How can we navigate risk? Let's start with inflation. This time, let's start with CPA Fredrick Kibedi.
How do we navigate risk? First of all, every investment, every business that does exist will face risk. There's no business that does not face risk. In fact, even your very existence faces some kind of risk, some kind of uncertainty that needs to be navigated. And quite often times, the higher the risk, the better the return. And that's the reason why the price goes like that. And so inflation is about the growing cost of inputs that keep on rising, so that the ability of the money that you have to purchase, the purchasing power of the money that you have begins to get less and less as you go by the day. And therefore, if you had 100,000 shillings that could purchase, and I think Dr. Charles spoke to the issue of land, if you had 7,000 shillings in 1970 that bought land, and you just kept that money somewhere, by the following year, 1971 or 72, you would not buy the same amount of piece of land with the 7,000 shillings. And it goes even for now. If I bought something today and got that money and kept it, if I go back to the same market, to the same place where I bought it, and try to buy that same thing again with the same amount of money, it will not be enough. That is inflation. The fact that the inputs prices keep on growing, and that itself happens naturally in all markets. that you have prices going up, and therefore making the value of the money that you have with you much less. So the goal should be to grow your investment in such a manner that it's faster than inflation. I normally tell people, if you have not gotten a salary increase in the last 3 years, and your salary has been the same the last 3 years, do not clap your hands and say, at least they have not reduced my salary. Your salary effectively has been reduced by the fact that it has faced inflation, and they are able to purchase much less than would have purchased had there been a free fall in terms of absence of inflation. And that's the reason why we must face the issue of risk, investment risk. And I'm glad you have started with the very first one, inflation. If I'm putting my money into a business that is not growing faster than the rate of inflation, as I know it, as I see it, I am losing it, and therefore I must protect myself from it. I don't know if I can explain it much better than that, but I think basically that is it. For the listeners listening, they would understand that if you started driving in 2000, the price of fuel, without putting in the factors of other aspects of it, would have been much less than it is today. And therefore, the same amount of money that you have today is not able to purchase the things that you are able to purchase 3 or 5 years ago. And that in itself is a risk that you must deal with. You must be able to sit down and be able to look at the amount of money that this business is growing, is giving you. And that's the question of measuring and keeping records, which is very important, because if you do not, you will not know. You'll only be happy that you have invested. You don't know whether you're making a loss or you're making a return. You don't know whether you have invested for others or not. It's like you get yourself to a business and your gross margins are much less than the rate at which you have borrowed. In other words, you have borrowed to invest, and therefore you have actually put that you're working for the lender. The lender is the one actually who is your boss, but you might not even know.
Thank you. Thank you very much, CPA Fredrick Kibedi, on inflation. Dr. Charles, one reason why we want all of you to repeat these responses because we want to learn from your rich experience and expertise.
Yeah, the aspect of inflation, I look at it from the time value of money. Money today will not be having the same value tomorrow. And therefore, as you sit today, look at the money you have. If you want to protect the money you need to have tomorrow, you must factor the aspect of inflation. And that requires some complicated calculations, but know that money today will not be money tomorrow. And therefore, you have to look at the aspects that allow your money to grow at a faster rate than inflation. So you have to get interested in knowing the figures. What are the inflation rates in our country? And what rate is my money growing? Is it actually higher than the inflation rate? When you go to bonds, the answer is yes. When you go to money market, the answer is yes. But in some, the answer may be no. But saying that it is higher today does not mean it will remain higher tomorrow. So we must keep alert of what is happening in our environment so that we are able to know that our money is growing at a faster rate than inflation. Otherwise, it starts losing value. But also the important point to pick here is to reflect on putting money in things that don't lose value easily. Land is one such an example. That's why some people talk of the gold standard. People keeping money in gold, in things that are fairly fixed, that can retain value. but all the others can easily lose value. That's what would be my take.
Thank you very much. I told you at the beginning that we have board members here, regulators here, investors here, chief executive officers here, students here, and business community. You are most welcome. Time is not on our side now. We need to move very fast. 1 minute each for these questions. CPA, Fredrick Kibedi, 1 minute talk on taxes in relation to investment.
The tax considerations and the effect on savings in terms of the options that you have, because when you're investing, you also must look at where the return is and how that return is taxed. The interest on bank deposits over 10 million shillings is taxed. Treasury bonds and treasury bills attract a tax. I think it's about 20% of withholding tax as the final tax. Collective investments, where you have put this money in unit trusts or in circles, are tax-free for now, and that means that you enjoy a deferred taxation regime until the point in time when you actually have the money within your hands. And in itself is something that you need to look at. You need an advisor. The problem that we have many times is that when people are thinking about making these decisions on investments, they go to lawyers. And they think that the lawyer is going to navigate all these things, but you need an advisor be able to give you a kind of scheme around things and where your investment is going and how much is going to whether you should invest in a share or you should invest in a bond or you should invest in a treasury bill. It is something that is very important to consider. I don't know. I would need to sit down with somebody to be able to walk them through the path they have taken on investment, the returns that they are going to get, and whether it presents a tax planning opportunity for them or not. And tax is one of the other things that it may eat away your savings if you have not planned it very well. You need to plan it in such a manner that you have spread them in a way that gives you advantage over another person in terms of tax opportunities, which you call the tax incentives that would be within the framework of this particular economy. This is something that you need to go into with your eyes open, don't go in very blindly, because you might find yourself. I don't think I can make it more than that in 1 minute.
The producer have added us some 20 minutes, and it is getting better. Online questions are also going to come. Dr. Charles, can you hear me? Can you hear me? Well, additional 20 minutes added by the producers and Dr. Charles.
Thank
Taxes.
you. Taxation is one other expense for running a business or for running your operations. And therefore, if you have earned 100,000, you need to understand that whole 100,000 is not yours. Part of it is going to go to the expenses that you use to buy the items you use to get that income. The second will be, say, the rent. The other will be, say, utilities. The other will be other costs. You must also include the other cost of taxes. And you need to get to understand what tax am I exposed to this income. And that's where a professional like CPA Kibedi, a professional like Charles, a professional like CMA Dr. Guan can come in and advise you on the tax exposures of specific income sources. When you are aware of that, then you know that this is what I'm exposed to, and therefore put it aside. But the danger that normally happens is when you get all that income, you think it is all your money, you use it, 6 months down the road, 1 year down the road, the taxman comes, where is my money? You don't have it. And the trouble sets in. For me, that's what I would say in 1 minute. It's a short time.
Thank you, thank you, thank you. Dr. Charles, now then we go back to CPA Fredrick. Still on investment. Fraud.
Okay. My take is that we need to begin from our homes in terms of the discipline that we want to see in the institutions. If you give your children pocket money or money to go and do shopping and they bring account back, how do you expect them when they go to a job and they are given an advance to spend and therefore bring a balance to the company? That's one angle. The second angle is that we must work on making fraud very risky, so that one knows if I am caught, the punishment is severe. Why it is killing the business? You see, somebody is able to bring fuel into the country and sell it cheaper. Another one brings it and sells it at a normal price and fails to get customers. Another one will go to China and bring items and sell them in a shop at a lower price. Maybe because he maneuvered around taxes. Maybe because he maneuvered around the software he's using that is free for you actually paying for it. That's all fraud, and it is hurting business day in, day out. Somebody rents a space and is paying a lot of rent, then hawkers go in front of him and start selling the same items. That's also fraud. You are defrauding that person from the customers that he would ordinarily get to enter into his shop or her shop. And therefore, for me, in brief, that's what I would say, that the cost of fraud is high, and we must work on deterrent measures to minimize fraud.
Wonderful. Those joining us, we have an extension, savings and investment options and strategies. We have two distinguished panelists, CPA Fredrick Kibedi and Dr. Charles Barugahare. Fredrick, fraud.
And following the conversation with the doctor over there, I think the idea we are really realized that it has to start with the power of one and not wait for others, the better. But also from an investment perspective, we need to be aware of the schemes that are taking place within our world today, where people are thinking about grow it quick, get quick money, and this money and that money. And many times it is coming in form of things where people are realizing they are losing their savings as a result of getting into Ponzi schemes that build up very fast. And the money, you know how the money is being made, but you're being told that you get a lot of money. 3-4 days you have the money. I know of a scheme very recently, I think about 3 or 4 years ago, that it was targeting university students. You can buy rare show you a video that the goods are growing, they have multiplied, they have gone this much. Now you have this hard. And then when it comes to how it translates into the money coming into your pocket, you don't understand it, but because you wanted to gain things quick, you find yourself in a situation where we have been defrauded. So we need to be aware of this because, and we need to be a little bit more aware in terms of being able to read. Again, Ugandans, very few of them read, very few of them take interest in articles that are exposing this kind of evil. At the end of the day, the saving, translating into investment that would be the survival, long-term survival is all robbed within just such a short time. And I think that's where sometimes you find yourself robbed if it's not regulated, if it's not clear how it goes. Be slow in getting into those schemes and be quick at making decisions where there's clear regulation, clear, clear, clear-cut principles and disciplines of getting things done, and there you are. So I think that's the best I can talk about fraud schemes. There are so many, and we have seen so many businesses lose money. They don't reconcile what they have. They have no idea what is being given to them. Some of us, in terms of how they have invested in this thing, and at the end of the day, money is lost.
Wonderful, wonderful. Before we go to questions, just in 30 seconds, cybersecurity risk. CPA Kibedi?
Security risk, that is with us, and it's with us for a very long time. And I have advised people before that if you get into any kind of now there's what they call professional hackers, people who are on a daily basis looking at how to get money from your bank, how to get money around you, and therefore do not be quick to yield information that you have with yourself. The biggest risk that you have in the financial industry is cybersecurity. People getting encroaching on your privacy and making sure that they have actually taken money away from you. But the financial sector has actually found a way of doing this protection. One of it is two-factor authentication. When you initiate a transaction, there must be a confirmation with you again that this transaction is originating from you and it is for the intended beneficiary that you're trying to get to. Secondly is, I am now a student of big data technologies. I'm about to graduate with a master's in big data technologies. I've also learned that when you have websites that are not secure, and there are many on your phone, on your gadgets, they increase the risk of you getting robbed. Therefore, every website that you access that has no HTTPS on it, be very careful. You might be exposing yourself to cybersecurity risk, which can easily erode your information, erode your investment, erode all the hard-earned money that you have worked for, or you're going to work for in the future. So I think that's partly one of the things you need to be again aware of. Yes, the world has become small and it's global. The more it's global, the more the thieves are happening, training themselves on how to get around it. I don't know whether that's helpful. I could provide more help. I've written a paper that I'm going to share with the webinar hosts so that you are able to benefit from it.
Thank you, and we are coming to eat your cake during your graduation. Dr. Charles, cybersecurity risk. 30 seconds, please.
I don't know what I can say in 30 seconds. But I'm looking at the aspect of passwords. We easily share passwords, or by accident, as we access the emails, as we access our bank accounts, some people can be watching and therefore facilitate hacking. But the other is the aspect of the way systems are developed. They are developed with one, to make sure the system is strong, but the other is to make sure that he tests that the system is strong by trying to hack it. I don't know, I'm not an IT expert, but there are some issues there. So I think my view is that the IT people there need to guide us, but it is one of the leading causes of cyber security, because if the other one turns this side, then he can enter the system the way he wants, and he will be shocked. Thank you.
Thank you very much. And before we go to the questions, we have 2 minutes. But I want you to talk about regulation.
Thank you so much. The organizations or individuals must have rules, must have guidelines, must have policies to guide them in terms of how they should do things. When those guidelines are not there, or when they are weak, then the organizations tend to be affected in terms of their growth opportunities. Because some of the things will not be done well because either people are not guided or because there are loopholes in the system. So regulations are key and key and key. Thank you.
Thank you very much, CPA Fredrick Kibedi. Regulations?
This thing is about making sure that when you put your money somewhere, you also are able to look at the rules that govern the protection of that money. Many times insider trading rules are violated. The persons who have the money if you have invested, for example, in a collective scheme, the people who are running that money can easily misuse it. Therefore, you need to be aware. If you're in a circle, you need to be aware of what's going on. You need to be able to look at, and the reason for the regulation is so that they protect you, the investor. At the end of the day, you need to take interest in what is happening in the business where you have invested, and make sure that all the observations that the auditor is telling you, because the auditor has a responsibility towards you by statute, has a responsibility towards you, the shareholder, who may not have access to all the information that the directors and the people running the organizations have. Therefore, take interest in reading that report and appreciating and asking questions. It's not a stupid question, because every question is geared towards making sure that your resources, your money is protected. Ask questions even where you are the director and shareholder. I normally tell people there must be a distinction between the shareholder and the director. If you're playing both roles, I will address you as a shareholder. Let's first have a discussion as the director, then you report to the shareholder, who is yourself. Because this business is separate from you, it must make sense. If it doesn't make sense to you, then why are you investing in it? And this is where regulation is very important, making sure that everybody is well protected. And of course, the world of accounting has developed accounting standards that disclose, as a bare minimum, many of the things that you'd ordinarily not see from the discussion that you'd have, or from plain eyes that you may have. Take interest in having them and understanding them. And within the economy of Uganda, we have the Capital Markets Authority, we have the Uganda Securities Exchange, we have the Bank of Uganda, we have the UMBRA regulations for micro lending, and we have the cooperative societies for the circles. All these are looking at making sure that there's transparency in protecting the person who is saving and investing.
And finally,
I don't know whether
you cannot talk about saving and investment options and strategies without talking about cash flow issues. Dr. Charles Barugahare, in 1 minute, cash flow.
Thank you. I don't know what justice I would give to
1
cash
minute.
flow. But cash flow is the lifeblood of business. That statement has been echoed by many, because without it, you cannot have operations. Money in, money out is the life of the business. Now, you can only think of saving and investment when you are actually able to manage your cash flow. You are able to know, this is the money that comes in, this is what I will spend, this is what I can put aside for investment, and this is what I can record in 6 months. This one I can wait for 2 years. The moment you are unable to do that, then you are managing your finances by accident. And I would really advise, if you manage money by accident, you need to get somebody to advise you, because cash flow is the lifeblood of your personal finances, is the lifeblood of your business. That's what I can say.
Thank you so much, Dr. Charles Barugahare. CPA Fredrick, cash flow, 30 seconds.
There's what we call going concern.
Yes.
The moment the cash flows do not reflect the fact that you are able to keep yourself alive for the next 12 months, we declare that there is a going concern problem. In other words, there is likelihood that the business is going to die. And you need to listen very carefully to the cash flows that you have put aside for normal operations so that you continue to operate, and the cash flows that you have invested. You can't be so stupid to invest everything and fail to have what you survive on to be able to continue to sustain incomes that are causing your livelihood. So that's a very important aspect. It's like an employee comes to me and says, I was not able to come to work today because all the money that I got, I have invested in land. Therefore, I am unable to come to work. It's laughable, because then what happens is that the very income that is sustaining the money that you are earning, you've cut it off. And I think there's wisdom to looking at the cash flows that you have from your operations and see how you're investing, what you're investing, and where you're getting the resources for the sustainable future. And I think that's the best I can say for now. I think that when you have a discussion with your financial consultant, it's very important when he raises the issue of going concern to listen, and listen very carefully and plan ways, making sure that your survival is guaranteed by good financial planning. Otherwise, you are managing by accident, or you are an accident that is waiting to happen.
Thank you so much, CPA Fredrick Kibedi. Now we have few questions before I ask you for your parting thought, and please be brief and straight to the point. Investment options, unit trust, and real estate. An investor is asking, what would be your best choice? Unit trust or real estate?
I've actually answered that question in the chat and said that unit trusts need a little more money to be able to. You need to be able to earn. You'll be able to earn about 10 to 12% as it is, and stay liquid within 3 days, and then spread the risk across. For treasury bills and treasury bonds and equities under the oversight of Capital Markets Authority, that's really very well covered for. But for real estate demands, you need a lot more money. You don't need just 100,000 shillings. You need more than probably 10 million shillings, and then look at the yield between 6 to 8%, and rentals plus, of course, looking at appreciation as the other aspect, because the asset appreciate as you go up. I think it's the most important thing is to build the liquidity first, and then move into auto save mode, such that you now begin to arrange your cash flows in a manner that you have the liquid from which you can get money to save, and then be able to sustain that along the way. I think it is something that you need to work out from a point of view of wisdom from where you stand. I can't say go to unit trust or go to real estate investment, because they require different cash outlays for you to be able to make sense out of it. I hope I've answered it.
Thank you very much. Dr. Charles, is there anything you want to add?
No, I think it's about your goals, and therefore how the type of investment aligns with your goals. Because you can start with one and lead to the other, and you also focus on one. So it's about your goals and your cash flow interests that Fredrick has elaborated, and therefore I limit it to that.
An investor is also asking for insurance policy for 10 years and above. Is there insurance policy 10 years and above? That's a question from an investor.
Yeah, and the insurance products are growing by the day, and they are being innovative as well in that industry. You'll find the insurance schemes that can go even for close to the entirety of your life in terms of what you're looking for. I think you just need to be able to open up your mind to what your goals are and how you work out the cash flows to make sure that you are guaranteed those cash flows in the next 10 years. It's very possible we can speak offline here and be able to advise.
Someone is also asking here that is there coaching possibilities? And the answer is yes. Dr. Charles Barugahare is a coach, he's a mentor, and he's a business leader, and he has written books that can guide you. 9 pillars to explore your potential, a guide to self-improvement, and navigating the financial path, the 30-day personal finance improvement challenge, and also break expenses, rising to outpace income. And you can get all these details in the website. And also for those just joining, you can still go to YouTube and you listen for the conversation and the engagement that we had with the distinguished panelists, CPA Fredrick Kibedi and Dr. Charles Barugahare. Now the parting shot. Savings and investments, options and strategies. You have given us your childhood memories of savings and investment. CPA Fredrick Kibedi, where you sit, where you stand. We have in the audience chief executive officers, directors, regulators, investors, academicians, business community, students. What would be your parting shot?
I think to sum it all, I would first of all tell you that a dog which is not prepared run away from a bone even when it's thrown at it. That is the saying from where I come from. A dog that is not steady, which is sleepy, when the master is eating, it's not following the movements from the plate to the mouth. And so when he throws the bone, he thinks the master is beating it to ask it to go, so to run away. But a steady dog will watch every move, even if it means 40 times, until the bone is thrown because there's an expectation. And so I want to appeal to the audience here in the various categories where they are. Remember, this is about you being ready for the future. It's about you demonstrating that you are able to live meaningfully and in a dignified way all throughout your life. Pay yourself first, and that's my tagline. Pay yourself first, automate your savings, and these days it's very easy to automate your savings. You can issue a standing order on your bank account. You can do an automobile savings instruction. The applications now are many. You don't have to go and line up in the bank. Pay yourself first, automate your savings, and then make sure that you have discipline, because discipline will beat the returns, and the projections will help you beat the returns on the projections. Start small, stay consistent, remember that compound discipline is greater than compound interest, which is very important uh, for us as people who have gone to school. You know, if you're on this platform, somehow you've gone to school. How come you cannot do the things much better than those who are not exposed? It's because of indiscipline. And I think that would be my parting shot to say, let us start small, stay consistent, and then achieve the life goal that we want to achieve. Doctor.
Thank you very much for that parting shot. Dr. Charles Barugahare, your parting shot.
Thank you so much. Number one is financial education, that we must continue to update our knowledge to be able to know what is changing and be able to adapt very quickly, because without that it will be very, very challenging. And because of that, finance is very committed. And the next webinar will be on 25th of June, 6 p.m. And the focus is budgeting in fast-changing times. We'll bring a panelist that will inspire all of you, and we'll be able then to navigate that topic as well. Number two, our second group coaching session, which limits ourselves to a maximum of 10 participants, starts on 18th of June, 6 p.m. to 8 p.m. The slot only allows 10 participants only. The other important thing is start small, steadily grow with it. People will wonder several years how you did it. Thank you so much.
Thank you very much, our audience, for consistently staying online. Thanks for the questions. And a big round of applause to our panelists, CPA Fredrick, Kibedi. Thank you very much for your contributions and submission. Dr. Charles Barugahare, thank you so much. We have heard, we build our bridge as we walk on. From me to you, Robinson Isaac Ogwang. Bye-bye, God bless.